All right, permanent differences. These do not create deferred tax assets and liabilities. We're never going to reconcile. Here are some great examples. Tax-exempt interest income. Well, municipal bonds, these are bonds through municipalities, small local governments. Why are they tax exempt? Well, the federal government wants you to incentivize you to invest in local municipalities instead of corporations through debt. So they provide tax exempt income. This is a classic example on many exams. This comes up in pretty much every exam. These are not includable in tax income, but they're reported as income for financial purposes. Financially, you're just reporting what happened. That's what you're doing. Taxes, however, have these arbitrary rules to incentivize us, persuade us to do various things. This creates a permanent difference between book and tax income. We've got some differences for income items, differences for expense items. Fines and penalties, as I mentioned earlier, these are violations of laws or regulations. If you're paying a fine for misdeed or something like that, or penalty, any sort of negative fine or penalty, these are not tax deductible, but they're going to be recognized as expenses for financial purposes. This is going to create a permanent difference between book and tax. Now we've got non-deductible meals and entertainment expenses. This is so we've got some meals, so entertainment expenses can't really be deducted anymore. Meals, some are 50% deductible, some are 100% deductible. So lots of different rules there covered in other lessons. But partially deductible, while they're fully expensed for financial purposes. And why are they fully expensed? Well, just that's an expense. The money went out the door. This is going to create a permanent difference between book and tax for these expense types. Dividends received deduction. Corporations are often allowed a deduction for a portion of the dividends received from other corporations for tax purposes. This deduction is not going to be applicable for financial accounting purposes, resulting in a permanent difference between book and tax income. This is another thing where we talk about this in another lesson and make sure you know it from there. But here we're pulling it in, showing that it has more to it than what you just covered mathematically. Let's run through an example here. Suppose that company XYZ has the following financial transactions in a given year. Got a few here. You may recognize some of these as temporary permanent differences. We'll come back to those. Here's our calculation of book income. Now, generally, because we are on the tax exam, we'll start with book income and have to figure out what taxable income is. I mean, theoretically, couldn't they give you tax income and say figure out what book income is? Yeah, but again, we are in the tax exam, so generally, we'll start with book. Now, for book purposes, there's no reason any of these would be excluded or adjusted. We would just start with income of $10,000, subtract $2,000, subtract another $3,000 of expenses, and add back another $8,000 for dividends received, giving us book income of $13,000. So that's book income. The question could have just given you the income, said it's 13. It could say calculate it, but either way, we come out with $13,000. Now, for tax purposes, what's our income? Well, tax-exempt interest income, it could also say municipal interest income. This is going to be $0. We're not going to include this in taxable income. Fines and penalties, this is not going to be a deduction either, so we see 0 and 0. For non-deductible meals and entertainment expenses, it does tell us that this is 50% non-deductible. Now, for tax purposes, for the differences, if you have an internal company event, such as you have a pizza party for your employees, that's 100% deductible. If it's taking a client out to lunch, that's going to be 50% deductible. And lastly here, dividends received, we are going to do the dividends received deduction. Not going to go through the insane math for that. That's in other lessons, but this is going to be 20% taxable because of our DRD calculation. Final answer here is going to be taxable income of $100. So we see here the immense difference between what we could see. Example, the permanent differences result in a discrepancy between the book income and the taxable income. These are not going to reverse over time, and these will permanently affect the company's financial and tax reporting.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.